If you're like most people, you know investing is wise. However, knowing the best investment strategy for your financial situation, age, risk tolerance, and goals can be tricky. This video will review 7 tips for building a diversified investment portfolio, no matter if you're just getting started or have been at it for decades. Hi, I'm Laura Adams, an award-winning personal finance author and Money Girl podcast host with 43 million downloads. For over a decade, I've helped millions of readers and listeners understand how to manage money and build wealth. Our goal is to offer tips and advice you can put into practice for more financial security and success. Tip 1 is to start investing. Even if you don't think you have money to invest, it's better to start earlier rather than later, so your money begins growing. You can always change your investing strategy as you go. But waiting for the perfect time to invest causes you to lose significant earnings, and trying to catch up later can be challenging. Remember that trying to time the market isn't as powerful as your time in the market. Tip number 2 is to avoid market timing. Buying and selling securities or stocks isn't wise for the average investor. That's because no one can predict their values, whether they'll go up or down. A better strategy is to be highly diversified. That reduces risk while allowing you to earn higher average returns over time. So tip 3 is to buy investment funds. Funds like index funds and exchange-traded funds are inherently diversified because they're made up of hundreds or even thousands of underlying securities like stocks, bonds, currencies, or real estate. If some of those lose value, some will hold steady or even increase in value. That minimizes your potential losses. Tip 4 is to consider stock funds. Since the 20s, the historical average return of the stock market has been approximately 10%. While stock prices can fluctuate in the short term, history shows that prices are likely to increase over the long term. So if you have decades to go before retirement, consider investing a majority of your portfolio in stock funds. Tip 5 is to use a buy and hold investing strategy. Since volatility in the financial markets is uncontrollable, stay focused on building wealth over the long term with a buy and hold strategy. Ignore media hype and never make rash decisions like selling investments when their value drops. Your goal should be to get investment growth over decades, not month to month or even year to year. The 6th tip is to use a retirement account. When you purchase diversified investments using a tax-advantaged retirement account like an IRA, workplace 401k, or a self-employed plan, you build wealth and cut your taxes. Many employers offer traditional and Roth accounts with different rules and advantages. Traditional retirement accounts allow you to defer tax on contributions and earnings until you make withdrawals in the future. Roth accounts require you to pay tax on contributions, but provide tax-free withdrawals. Workplace retirement accounts are even more valuable if your employer matches contributions. And tip 7 is to get investing advice when needed. If you're unsure how to choose diversified investments or how much to invest, get advice from your benefits department at work or an independent financial advisor. You'll be glad you did, especially when you build a healthy nest egg that gives you peace of mind and financial security. To learn more about diversified investing, visit finder.com. Thanks for watching. If you like this video, please subscribe and you'll get notified when there are more helpful product reviews, money tips, and advice.